good morning, fellow traders, and welcome to today's live trading session. Today is November 29th, 2023, and we're pretty much near or at the end or close of another month, heading into December, the final month of the year. And this is when things start dying down, of course, during the middle of December, but for the most part, you can still find some trading opportunities. But with the way the charts are moving today, these opportunities are sort of limited. I couldn't really find any good opportunities that I really like. With every opportunity, or with most of the opportunities I found, there was always an issue with, whether or not it was in the right direction as far as bias and directionality. But for the most part, I'm just going to cover two momentum setups right now. And then from there, we're going to, I'm going to pass the mic over to Marvin, and then he's going to talk about what's been happening fundamentally, geopolitically, and all that good stuff. But yeah, when the market doesn't give you as many opportunities, it's your responsibility to be patient and not force anything to happen, but to only trade what you see and trade what fits your plan. And if you don't see anything that fits your plan, then just leave and just step away for an hour, few hours, whatever you want to do, or whatever time frame you typically trade. Based, your absence from the market on, what time frames you change. So then for me, I'm primarily looking at setups on the 1 hour. So, I'll probably step away for an hour just to see if things changed. But for the most part, we have very, very limited opportunities in the market. There's always opportunities, but ones that look clean and ones that fit my particular trading plan. But the first opportunity we're going to talk about, well, I don't know, Marv, did you want to say anything or no? It's up to you. I could talk about what we have here, or you can maybe mention a few things and then we can go from there.
Yeah, I just kind of, wanted to mention how, just like Melvin said, like he didn't find any opportunities or solid opportunities that fit his trading plan, while he was scanning the market. And really part of the reason for that is because I think the market is waiting for the full tranche of inflation updates or data to come out, because you remember this week was all about flash inflation, preliminary readings on inflation. And so far this month, what we see with the inflation data that has already come out, actually, we just had another inflation reading from Germany that came out that proved that we're in this disinflationary environment. And I think eventually when we do get the core PCE data coming out, some of the data later on, and really in a few more minutes, we have the core PCE data coming out, then that would be that full trench for today where traders can trade off of what they sense globally. And really the way it's looking, we're in this cycle or this phase of disinflation, and that's what's providing some of the whole euphoria or some of the whole positive mood that we see passing through with in the market, with the weaker US dollar and stocks rallying to the upside. So then I just kind of wanted to touch on that sometimes a setup may not form because the market is waiting for all the data to come out, and before they set a bias or a tone on where asset prices will go.
Yeah, yeah, exactly. So, I guess moving on from there, what we can do is look at some of the setups that we do have on our radar. And the first one is the Aussie Swiss franc, and we're currently looking at the 1 hour chart. But we can see here that we did get a minor pullback into this area right here. But this move lower comes after this grind to the upside. Price was making higher highs, higher lows, higher highs, and then all of a sudden we have a break of structure down here, a break of this low right here. And this is the true low that determined that, hey, the environment is shifting and we should look for sell opportunities. The minute this particular low right here was broken, that was when we knew, hey, we need to start looking for shorts now. So that took place. And what we typically want to do, we want to look for shorts on pullbacks. But we see here that we have this minor correction right here. Have this minor correction into this zone right here. And this is a zone of supply. But we could see here that price reacted to this zone, and there's a reason for that. The reason for that was because of what we'll see on a smaller time frame. Typically, whenever we see a hesitation candle like this and then one strong candle to the downside, typically what you could do is drop down to the 15-minute or the next lower time frame, and that would be your pullback time frame. So in this case, the trading time frame, was likely on the 15-minute chart. We have this 15-minute correction right into this zone of supply. We do know this is demand down here, but we could have entered a short right here and maybe traded right down into this area of demand for a quick scalp or a quick move. But we're going to see if we can get a deeper correction, because that's what I was hoping for and planning for. So in our case, what we typically want to see, we want to see a correction up into this area right here. And let me just do something right quick. One thing that you can do also is go to the Heikin-Ashi candles. So then let's do that. And the Heikin-Ashi candles will tell you the true levels that you need to pay attention to when it comes to supply and demand. And what we see right here on the Heikin-Ashi is that after this level is tested right here, this first one, we have this second one right here. So then if you wanted to, you can draw in another zone to identify this second area of supply. And this area is what we clearly see on our Heikin-Ashi candles. It's pretty obvious. It's an area where sellers came in and created this momentum or this movement to downside. So then we want to mark this, because what I'll be expecting is price to reach this zone potentially, or eventually, for price to eventually reach this zone. And there's no guarantee it could do that, but that's what we're going to look for. And if you go to the 1 hour chart, we can see here that this area right here, we can just zoom in. This area is an area of indecision right here. We see this indecision candle right here. So then technically you can do the whole zone or whole level. So then what I'm going to do, I'm going to mark this as 1 hour supply. And I'm going to do something else. I'm going to drop a line, a horizontal line right here, right where this zone begins right here. And I'm going to sort of move this out of the way, and I'm going to drag this full zone, the whole range of this candle right here. But I'm thinking that we could see price push up into the zone and potentially tag this yellow line right here. This yellow line where we obviously see structure. Look left, structure leaves clues. We can see that it was respected on multiple occasions, this yellow line. So I believe that this could be where price will be headed to before we see the sellers come in and cause that continuation in price. So for Aussie Swiss franc, this is what we're looking for. We're looking for a retracement into this zone of supply. So yeah, let me just draw that in. We're looking for price to retrace into this area of supply right here. And then from there, we'll be looking for a sell on bearish confirmation. If you want to, you can wait for bearish confirmation, or you can just look to sell. If you have a lot of things aligning, you could just look for that sell opportunity and then just trade this to the downside. Right here, we have this area of demand right here. Actually, this whole zone right here with these wicks. I don't know if you can, if you see it right here, we have, let me just point it, we have this candle right here, but we also have these candles with these nice wicks right here. This represents an area of demand that we have to be careful with. So then if we do want to shoot for extended targets, we definitely have to be mindful of this zone of demand. So Let me just draw that in right quick. Let me just say from here to here. This represents an area of demand that we could potentially see buyers come in and help push price higher. So we definitely want to mark that out. But we have this zone of demand right here, and we'll be waiting for the price to pull back. So again, if price corrects into this zone, we'll be looking for an opportunity to sell on bearish confirmation in some cases, or if you're more risk averse, you can just look to sell, or risk aggressive with your entries, then you can look to sell immediately once price reaches that particular zone. So yeah, that's pretty much it. Yeah, that's pretty much it. So then, yeah, we'll be waiting for price to reach this particular zone, and we'll see what takes place. Now, also, we do have an invalidation area as well. If we do get a 1 hour candle close above this yellow line, then that could sort of give us a clue that, hey, price, may be changing. We may need to shift our bias somewhat. So of course, we'll look for that. We'll look for price to break above this invalidation level. And if it does, if you get a break and close above this level, then I'll be sort of patient. I won't execute my sell until we see a break and close below this invalidation level. That's how I usually do it. But for the most part, we have all of this. So then, anyways, let me just set up this alert, and so that we can be notified whenever price reaches this particular zone. And yeah. So we're just going to put the date, and we're going to say price testing 1 hour supply zone. And then we can say look to sell, and then just keep it like that. We can also say if 3WP, the 3-wave pullback, look to sell, and that's on a smaller time frame. If we see a 3-wave pullback, then that's news for us. We can definitely look to trade this move to the downside. But yeah, so we have this alert set, so then we'll be fully aware of when price reaches this particular zone or area. But like I mentioned, I think we should see a retracement to this yellow line right here eventually. But you never know. Price may not do that. Price could continue falling or sliding lower. Who knows? But are there any questions in regards to the Aussie Swiss franc? Just let me know if you guys have any questions. I'll definitely answer any questions that you may have. But if you don't have any questions, then we can move to our next setup, which is I believe it's the Aussie Kiwi. Let me just check my notes just to make sure that is correct. Yep, the Aussie Kiwi. And then we do have another one. We have the Aussie Yen as well. Let me just do the Aussie Yen. I'm going to make the Aussie Yen real quick. AUDJPY. All right. So right now we're looking at the Aussie Yen, and we're currently looking at the 1 hour chart. But if you were to have a bias, what would your bias be? Would you have a bias to the upside, or would you have a bias to the downside? Let me just get some of your feedback. Where do you think this is headed? Do you think this is headed lower, or do you think it's headed higher? What do you guys think? Let me just poll you guys just to see what you guys think, and then I'll tell you what I think may happen. So do you think it's going to go up, or do you think price is going to go down? Do you think price is going to do something like this, or do you think price is going to do something like that? So let me just see Okay, Greg said lower, and I guess well, yeah, right. Um, Lower. Well, that's my bias. That's my sentiment. Exactly. I do believe price is going to go lower. And it's pretty obvious. We saw that we had a break. Oops. We saw that we had a break of structure right here when price broke this level right here. When price broke and closed below it, we should have been looking for sales ever since then. Where you could have. Let me just say that you could have. It all depends on how you typically trade. But we had the strong retracement, and then price came to supply, and then you could have sold right around here. And if you were aggressive or if you were patient, you could have held out until price reached this zone. But looking at price right now, you can pretty much say that we're sort of in a small period of indecision right now, or a range that could be defined, because you look at this, we can see that price created this low right here. Let me just created this low right here, and we're at this high right here. Let me just consider this also 1 hour structure. So then we have 1 hour structure to the upside, and even 1 hour structure, or really demand, because if you stretch this out, this is really an area of demand to the downside. So the wisest way to play this is to simply wait for price to break and close below this area to the downside, then look for a pullback, and then sell. So then that's the more wiser approach. And that's the approach that I'm going to take, because we don't know exactly if this zone is going to hold. So then the safest thing to do is to wait for price to clear this zone, wait for an expansion through this zone, and then wait for a pullback before we execute a sell. Because when price is consolidating like this, it could be either accumulating buy orders, or it could be in a phase where it's trying to accumulate sell orders, or some type of phase where it's just gathering more sales in order to help push price beyond this zone. So either of the two can happen, but whenever price is in consolidation, it's accumulating orders, either more buy orders or sell orders, or even sometimes both. But whoever has the most orders typically wins. But in this case, I think because of the environment that we're in a bearish environment. I do believe we could see a break and close to the downside. So then that is what I'm expecting for the Aussie yen. So this is what we're going to do. We're going to simply wait for price to break to the downside and expand to the downside. And then from there, we're going to simply wait for price to pull back and correct, because what was once support becomes resistance. And then from there, we will look for our sell and trade this to the downside. So again, let me just reiterate. We'll be looking for sales once price reaches this particular area, but we have to first wait for the breakout or breakdown in price. We don't just want to jump into the trade. We want to wait for a price to prove to us that the bears are in control and that we should be looking for shorts. And with what we've been seeing recently, we do know the bears have maintained some level of control. Now what we have to do is just wait for price to break and clear this zone. And then if it does that, then we're good. We know that we should look for a sell. The environment will be more cleaner. We'll have this nice impulse leg, and we'll know that, hey, we should be looking to short. So yeah, this is the Aussie yen. Are there any questions about this particular pair? I'll just give you guys a second to chime in. You know, of course, you can ask any question, even if it's a simple question, or, you know, there's no embarrassing question here. You know, whatever question you may have, then you can definitely ask. We'll be more than willing to help you out. All right, so I guess there aren't any questions. So then what you could do from here, you could just place an alert down here and be notified of when price does break this zone to the downside, or just keep an eye on it. But typically you could just say, hey, we're looking for price to break this zone, which sort of acts like a neckline, you could say. But to break that zone, and from there, we'll be looking for a pullback. So you could just say, hey, let me just look for a price to cross down once per bar close, because we're looking for a breakdown or a break and close. And you can just put the date. You could just tell price, hey, break and close below to confirm their control. Look to sell on pullback and retest of structure, because 1 hour demand, what was once demand, becomes supply, or really structure resistance. Okay, so yeah, we'll be looking for that to happen. We'll be waiting for price to expand, and then for a pullback, and then we'll look for an opportunity to short. All right, so yeah, are there any questions? I guess not. So then what we can do from here, we can move forward and go to our last remaining setup, which is the Aussie Kiwi. So let's do that right now. Let's go to the Aussie Kiwi. All right. All right, so right now we're looking at the Aussie Kiwi, and we're currently looking at the 1 hour chart, and it's pretty obvious where the bias is, where energy is, where momentum is, where force is. It's to the downside, mainly due to the announcement yesterday, or during the Asian session. We saw some data come out. Actually, I think it was RBNZ, Reserve Bank of New Zealand. They released their news or whatever as far as interest rate decisions. We sort of have an idea of where they want to go with that, and that is what contributed to this strengthening of the Kiwi. The Kiwi strengthened significantly, and of course, you know, we could trade on the side on the side of that Kiwi strength. So in this case, we're looking for shorts. We're looking to short the Australian dollar against the Kiwi dollar. And if you look at price, we have this long imbalance candle right here. This long imbalance candle, which creates this range. But what we want to do is measure and figure out where the halfway point is, because you know, that's where you'll typically see price go to. In this case, well, yeah, let me just we do it from here. Well, we'll keep it right there. But what we typically like to see is price test. Let me reverse this, do this the other way, because I'm trying to make a point. Because right here with this zone right here, this zone right here is too big. It's too big of a zone. So then what you could do is figure out the halfway or midway point of the zone and use that as your zone of entry. So then in this case, we have the midpoint right here where we have these two dots. So that's at 1.07858 or 86, 1.0786, you could say. So then what we can do, we can say, hey, right around 1.0786, right around that area is where we can look for price to potentially go to. In this case, it looks like price is turning a bit sooner, and there could be a reason why when we look at a smaller time frame. But for the most part, we would like to see price come up to this area right here before we do anything. Remember, when you have such a huge range in this inefficiency and balance candle, which is really news driven, you should do stuff like that. But as you can see, we didn't quite get to where we wanted to go. But price looks like it wants to head lower now. But yeah, let's drop down to the 15 to see what we see. If we can observe anything on the 15 minute. All right, so then this is the 15 minute, and yeah, we don't have too much. Let me do this right quick. Let me go from here all the way to here. Okay, yeah, we don't really have too much of an explanation why, but we don't want to go in yet. We want to stick to our rules. We will only look for sales when price reaches this zone. So if we have to miss out on this move, then we'll just miss out on this move. But you never know. We could see price do that because we never did get the three-wave pullback. We never did get it. We see a leg A. Now we see a leg B. And we need to eventually see a leg C, which I think will give us a setup right around this particular zone or the halfway point, and then that's when we can look for our opportunity to short. So yeah, we need to look for that to take place. But if it doesn't, we'll just move on and go from there. But I think we will, like, based on what I'm seeing on the 1 hour, like this is what I'm seeing, guys. Like right around here is where I think we're going to see some demand come in at. We should see some internal demand come in right around here, and then we could see price push up into this area. That's just what I think. But anyways, let's just talk about what we're expecting. We're expecting price to come into this zone, and then this is when we will look for our sell opportunity, and we can trade it either to this zone area right here. We can look for a trade down to here for or you can just take partial profits here and then close out the rest of your trade maybe around the lows around here. But it's your choice how you want to do it. You can even shoot for extended targets, but for the most part, we're only going to look for sales here, guys. So again, the price comes to the zone, we'll be looking for a short right here up in this area right here. We'll be looking to sell Aussie Kiwi. So let me know if there's any questions. Let me know if you guys have any questions on different things. But let me go down to also the 15 minute to see if that is truly a zone. I believe it is a zone. But we do have structure right here. This congestion area. Price broke it. Price now is coming back down to it. Stochastic is near oversold. So I do believe we could see a rebound or a bounce from here and see price head higher. So, we could definitely see that happen somewhere within this zone, or even now. It could start correcting higher and creating that leg C that we typically want to see. All right. So yeah, we'll just wait for that to happen. But again, let me just turn on my price alert so that we can be notified of whenever that does happen. And also, let me do one more thing. I'm going to do Fibonacci just to see what this level is. So let me do this. Let me turn on the Hakanachi for one. Okay, so I'm going to do it from this green Hakanachi candle right here. That was the most real or legitimate, one of the legitimate pullbacks. Okay, so that 50 level lines perfectly with our zone. You see that? It lines perfectly with it. So then we definitely have confluence in this area. Price is not only touching this imbalance or touching this imbalance zone, but we do have a 50% retracement. So then if I do set a price alert, then that's what, you know, I'm going to acknowledge. But we can see here, yeah, look at price reacting to this level. Well, no, this is on a Hakanachi. That's the reason why. That's the reason why we see that. I almost got confused there. But yeah, going back to the candles, you know, we're expecting price to pull back to this area where we do have the 50 showing confluence. So again, what we're going to do, we're just going to set up a price alert right here, and we're going to say price is testing 1 hour imbalance and the 50% fib. Look to short. It's just that simple. So the date 11/29, and let's say price is testing 1 hour imbalance zone plus 50% fib. They could say if 3-way pullback, which most likely it will be if you do get that correction higher, look to sell. All right. So yeah, yep. So yeah, we're starting to see that reaction from that level right now. Like, you know, like we estimated. So yeah, hopefully we'll get that full release. And we won't see prices touch this area and then fall lower, because price can do that. You know, it doesn't have to go to it. It can come right back up to this high, and then all of a sudden, you know, go back down. Which reminds me, maybe I should draw in our leg C just to see where leg C would go. So let me just do that right quick. So we have leg A, which is this here, and that could potentially go anywhere within this particular zone right here. This is our leg A, but let's also do the lower range, or the lower limit of that range. So from here all the way here. So from here we see that the range could be anywhere from here. So yeah, let me just draw that in. So anywhere from here all the way up to here is our price reversal zone. So if price comes into this area, then we have to be on the lookout for for the shorts as well. So yeah, we can actually jot that down as well as a price reversal zone. So then let's just move this all out the way. And yeah, we'll be waiting for price to reach the zone. You can see how price is beautifully responding to the zone, which is what I sort of saw even on a 1 hour time frame. I saw something about that area that made me think, hey, this could be where price reverses. But we see price pushing into the zone, and we need to, or well, not yet. It hasn't pushed into the zone yet, but it may want to. So yeah, so then let me just say this, because if stochastic is oversold right here, then that's good news for us. So then we can say add another alert. Let me see. Price is testing PRZ zone. If overbought on 15 minute, look to sell AUD. Or look to sell. All right. So yeah, we'll be looking to sell once price reaches this area. Hopefully it reaches this pink line, because that's where I would like it to go. But we have 2 alerts, so we definitely won't miss out on this move if price does fall short and then starts sliding lower. All right, Look at this nice rejection from this zone. See, when you understand price action, you can identify those zones, those levels where price will respond to and react to. So we see that perfectly here. But yeah, anyways, let me just stop from there. And I guess what we can do is I can pass the mic over to Marvin, and he can talk about what's been going on fundamentally, geopolitically, all that good stuff. But I hope this helped you guys out. I hope you got further guidance on how to look at price and price action. But if not, then that's okay, because the more you see it, the more you'll get better at it. So there's nothing wrong with looking at something over and over again, looking at a particular approach or style of trading over and over again. Over time, you'll get a feel for how I analyze the markets. But yeah. So with that said, I guess I don't know if Marvin, if you're ready, but we can just move on from here. And yeah, so I'm going to pass the mic over to Marvin, and he's going to talk about fundamentals, geopolitical stuff, all that good stuff. Yeah. So yeah, right now I'm just going to briefly talk about what just happened. Actually, just a few minutes ago, roughly 10 minutes ago, because really we had a slew of sort of like important data that came out on this Wednesday morning. We had US GDP, the second estimate for US GDP for the third quarter. And if you guys have been looking at your news wires or your feeds, you would know that GDP growth came in at 5.2%. It actually accelerated and increased in the third quarter. And this is just the second estimate. You remember how before there was this estimate of it being like 4.9 or 4.5% increase in the third quarter, or growth in the third quarter. But right now, based on this second estimate, the actual reading came in at 5.2% growth. So then this is pretty interesting, because in an environment or in a season where we're seeing rising interest rates, you would think rising interest rate would make cash more expensive, and we'll see a drop in growth. Or, also even in the midst of inflation, when we're in this season where the prices of goods and services are high, you would think that that would quench consumer activity and consumption. But we see accelerated growth, while even today we're seeing signs of disinflation. Because we just also had the core PCE data for the third quarter, and it showed disinflation as well. It came in lower as well. So then what I want to do briefly right now, before we talk about what's going on in the charts, what's happening in the dollar, is to go to our economic docket. But yeah, let me just go to the Dixie real quick, so that we can just look at the US dollar index and just see briefly what the US dollar index is doing. And as you can see, it's sort of retracing some of the sell-off from yesterday. We're seeing this support for the dollar. This could simply be it trying to, correct in anticipation of a further deeper sell-off. But this is what's weighing on gold. The strong dollar is sort of keeping gold prices a little bit lower right now, and sort of resisting that gold rally. But let me just go to a smaller time frame to see how the Dixie responded to the data that came out. And as you can see, we see the dollar begin to move and spike to the upside on such a strong GDP figure. And it seems as if right now we're not seeing growth or aggregate demand slow down. It seems as if for the third quarter, we're seeing this expansion, this economic expansion with the growth data. So it's sort of interesting how we're getting this immaculate growth coming in the midst of interest rate hikes and high inflation. We're seeing this growth in the economy, and that may mean that the Fed may not be done. They may have to do a little bit more. Even though for the past few weeks, we've been hearing Fed members say that, we're at the end of the rate hike cycle. And even on yesterday, we had a slew of Fed members do their speeches, and they pretty much said that, we could be planning, especially Waller's speech, Fed Waller. He came out and even made a bold statement to even suggest that the Fed
we may see a drop in inflation to good, decent levels in 4 to 5 months that will warrant the Fed to have to cut rates even within 4 months. So then that brings up the timeline to sort of like March of when we will see rate cuts, according to Fed member Waller, who is really a hawk. He's one of the hawks of the hawks. He's very hawkish, but yet he's talking about rate cuts. So this is what contributed to the sell-off in the US dollar on yesterday. We saw US Treasury yields fall lower. But as you can see with the growth data that came out, we see that the Fed may have to do a little bit more to sort of tighten monetary policy. And this is why we saw this lift in the dollar when an announcement came out. But right now you can see that it's in the midst of sort of trying to retrace some of that post-announcement gain. So then right now what I'm going to do, we're going to go to our economic docket. We're going to do this right now. So let me just pull up. Okay, this is not it right here. Okay, let me do this. I'm trying to pull up this web browser so we can kind of look at the economic data. So then let's just go to daily FX. Let's right here, daily FX, their economic calendar. The reason why I like going to it, well, for one, it's good on the eyes. For those of you guys that are viewing this on your cell phones or tablets, you'll be able to see clearly these numbers and what happened. But yeah, like I'm not going to discuss, all of the prints that came out. We had a lot of prints, inflation, flash inflation, preliminary inflation prints that is showing that we're in this cycle or phase of disinflation globally, and we're seeing it across the market. We're seeing it in Germany. We're seeing it, pretty much everywhere. This disinflation come out, and and even when we look at I didn't even, look at this 10-year bond auction that, it had a pretty decent bond auction because they were willing to take it up at a cheaper or lower yield. So then that's good for the German economy, good for demand. So yeah, but let's go down to what happened at the start of this session. So then, just like I talked about before, we had German inflation data come out, and we could see it in the red. We could see that it fell below forecast, and also it weakened below the previous reading. So then this lets us know that Germany is also experiencing disinflation. This, right here, along with the US, we're seeing signs of disinflation when it comes to the core, PCE data. You can see here that the core PCE data came in at 2.3% on a quarter-to-quarter basis, which according to the Fed's preferred target is kind of like around that. But you got to keep in mind that this is for Q3, this is for the third quarter. And this may not be reflective of the annualized figure of what we see with inflation. We'll get those figures on tomorrow for the core PCE, but you can see that it's close to the Fed's preferred target. And yeah, we see these numbers coming out. PCE prices right here. We see this is the headline figure for the quarterly figure, that it also showed that inflation decelerated to 2.8%. It then kind of hit the forecast, even though we see a pickup from the previous month. So yeah, so then pretty much when you look globally from a macro lens, you can see that we're having this immaculate drop in inflation or disinflation. And even though these are the readings that are being reported, we don't know if some of these bureaus are cooking the books and delivering data that will help prop up the stock market, since we're about to move into an election cycle or election year, and especially in the US. We don't know if these readings could be accurate, but what we do know is that the market or traders respond to the headlines. Regardless of if it's true or not, traders are going to trade based on what they see coming out with inflation. So then we're seeing signs of disinflation, but what has been a common discussion among economists around the world is that we're seeing this disinflation come in, but we're also not seeing a pickup in unemployment, because usually that's what we should see. We should see inflation. Of course, that have an impact on growth, and eventually companies will have to lay off employees and workers to sort of stay afloat and to maintain, their business activity. They may have to cut back, do some, various cuts within the company. And we're not seeing that. We're seeing disinflation at the moment, but we haven't seen unemployment take up. And the reason, why we're seeing the strong GDP figures, because consumption is still pretty solid. Like consumer behavior is pretty solid. We talked about that on Monday, even with the holiday shopping from this past weekend, with Black Friday improving by 2.6% from last year. We saw a similar type of result for Cyber Monday, but of course, it wasn't exactly like Black Friday. But what we see consumer activity propping up, picking up, even in the midst of a high interest rate environment. So then a lot of that is due to the tight labor market. The tight labor market is allowing more people to gain more money, more income. And as they get paid income, they're spending their money, but they're also using credit cards to finance some of their purchases as well. So then we haven't seen a drop in unemployment, even though we're seeing signs of disinflation in the market. So then that is causing some concern. But yeah, I think all of this is creating this environment of soft landing. We're seeing, stock market rally. I think even for today, let me just go to FinViz real quick so we can look at our futures heat map right here. And you can see that even across the board in our global equity future indices, you can see all of them are sort of in the green. All of them are rallying to the upside and positive for the session, as we begin to see this good mood, this sort of like, soft landing, risk appetite, this drive to, send markets higher into the holidays or into the Christmas season. We're seeing that play out right now. And we see the VIX is selling off. The VIX is, lower, at the moment. And we also see oil. You remember we talked about, well, those of you guys that joined us in the private war room, we're seeing this pickup in oil prices, which is also a good sign for U.S. equities, but also, global equity indices across the board, because there's a tight positive correlation between oil prices and the equity indices, what happens in the equity market or the stock market. So we can see here that there seems to be this positive risk tone for today. And even when you look at commodities look fairly mixed. But even gold, what we talked about earlier, gold is sort of at the mercy of the US dollar. And we see that the US dollar is sort of firm for today, but that can change anytime during the session. We see Dr. Copper, pushing to the upside, slightly positive. And we also see Dr. Russell showing off as well, and it's positive, and it's definitely benefiting from some of the disinflation news from the low Treasury yields that are happening, that just came out this today thus far. So then this is our heat map. Let's go to the Forex currency heat map to see what are the strongest and weakest currencies for today. So the strongest currency for today is the New Zealand dollar. And for those of you guys that do follow the news, you would know that the RBNZ, the Reserve Bank of New Zealand, released their monetary policy statement and interest rate decision during the Asian trading session. And what they pretty much decided to do, they decided to keep their official cash rate at 5.5%. They decided to keep it on hold, but it was a hawkish hold because they were saying that they're not planning to cut rates until the middle of 2025. Not the middle of 2024, but the middle of 2025. That's when they plan to pretty much cut interest rates. So then that's a hawkish hold. That's a hold of that 5.5% interest rate for almost a year and a half or 2 years, in a sense. Just for a long period of time, they plan to keep monetary policy on hold. So then that's a pretty tight policy. And we saw the New Zealand dollar surge or spike to the upside on that guidance from the central bank that they were going to keep rates high.
for longer, higher for longer until the middle of 2025. So then you see the New Zealand dollar is the strongest, followed by the Swiss franc. I'm not quite sure why the Swiss franc is strengthening. I haven't kind of read up on it, but the Swiss franc is surprisingly one of the stronger currencies for today, followed by the US dollar. You remember the US dollar has been firming, but it's coming in at a close third among the majors. And you can see here that the weakest currency for today, is the Aussie, the Australian dollar. The Aussie is selling off. I think, this could be due to a few things. It could be trading at the mercy of iron ore, what's happening in iron ore and some of the hard industrial metals, but also is getting some of that flow and impact from China as well. But the Australian dollar, is the weakest currency for the session after being the strongest for a period of time.
Yeah. The Aussie's been rallying for a while now. So, this what we see taking place today is sort of expected. But we did see the Aussie, retrace some bit. That's the reason why we're bearish on the Australian dollar, mainly due to, how we saw price move during the European session. But yeah, for the most part, Aussie has been going higher and higher and higher. A correction like this was due to happen.
Yeah, exactly. And, the second weak currency is the Japanese yen. The Japanese yen was really strong on yesterday and the day before yesterday, but it's sort of weaker, is trading on the weak side, primarily at the mercy of the US dollar. As the US dollar firms up, and as Treasury yields slightly pick up and tick up, that's going to sort of, increase or, that yield differential. And we're going to see the Japanese yen sort of weaken just on the very fact that the US dollar is strengthening. So the Japanese yen is weak at the moment, and also the euro is weak. We saw the inflation data coming out of Germany showing disinflation. Even if you want to look at the other Eurozone flash CPI data that came out, early in the European session, we saw disinflation as well. So then, of course, it makes sense for the euro to sell off, because that means that the ECB may have to pivot maybe a lot sooner than maybe they anticipated. They're more closer to cutting rates than actually hiking. But, of course, we see the euro as one of the weaker currencies for the session as well.
Yeah, it's actually been an indecision for a while. For really most of this week, it's been really confined in the range. And it's been kind of hard to read where price wants to go. But for the most part, if you always pair a currency that's in indecision with a currency that is strengthening and has obvious order flow, you can sort of get an idea of where price wants to go. So then for pairs dealing with the euro, you definitely want to do that. So you can trade like the euro kiwi, look for shorting, because that was one pair that I was going to look at as well, the euro kiwi. But for the most part, the euro by itself has been sort of neutral.
Yeah. So then,
with a slight bearish bias.
Yeah, exactly. It's sort of like in consolidation, not clear on what the conviction is regarding the euro. But maybe the market was sort of waiting on this update, the inflation news. But we'll see. But if we go over to the cryptocurrency space, we haven't been there or looked at cryptocurrencies in a while. We can see that the Bitcoin is leading for today is positive. Litecoin, really most of these are positive, but we also see that it's trading in the backdrop, or is trading in context of a firmer US dollar for today. So it's going to sort of maintain that range and sort of be neutral as the US dollar firms. We're going to see digital gold also sort of the rally sort of withheld, or kind of the rally higher is going to be resisted in a sense due to the stronger US dollar.
Yeah, but the very fact that price has already been positive for these cryptos just lets us know that, hey, you may want to stay on the side of buying these cryptos for today, since the move up is stronger than the strength or move of the dollar. So then that gives more weight to what's happening in the crypto market. Most cryptocurrencies are likely rallying for today.
I agree. And also, if you think about it, like if we're in this if there's been this talk of soft landing,
And we see this being played out with your traditional stock markets, traditional legacy assets that are tied to that are risk sensitive. They're moving to the upside, like stocks. Then it makes sense for maybe some investor to say, well, I'm okay with taking a little bit more risk in the crypto markets, because if it's true that we should see a weaker dollar over the next few months, then it makes sense for me to buy crypto priced in US dollars, or buy cryptocurrencies as the cost of cash would be cheaper, or as monetary conditions loosen, and then we have more easier monetary conditions, the price or the cost of the dollar would be cheaper. So you'll take that into an asset that can actually provide some yield. And of course, in an environment of risk appetite, people are willing to take risk in the digital assets. So then yeah, it's a good time to invest. But yeah, you see the cryptocurrency market sort of trying to firm and restore its luster from 2 years ago. But yeah, you can see that Bitcoin is positive for the session. So yeah, this is futures markets are in the green. So then let me see what's coming out later on in the session. I don't think there's much else. We have weekly EIA crude oil inventories coming out. This is a weekly figure, so then that would definitely impact the price of oil, and it may even have somewhat of an impact even on the Canadian dollar. We'll see. But we also have a slew of Russian data coming out. Russian unemployment rate. You can see how their unemployment rate has been low, 3%. But we see that'll be coming out. Business confidence, industrial production data, retail sales year over year is expected to come out. So then that's going to be interesting to monitor, since they've been in the midst of this conflict with Ukraine. It'll be good to see how that conflict has impacted their economy. But yeah, we don't really have much on the docket for today. Not much high tier news. We have Fed member Mester speaking, and then we had the Fed Beige book coming out later in the U.S. afternoon. But aside from that, like, most of the important data would come out Thursday and Friday. Like, that's when things would start heating up, even though we started to see it on today. But it seems as if we're still seeing that holiday mood sort of still linger in the market. It seems as if, like, even though we've been having data come out, we haven't seen the strong type of reaction that we normally see when we do get these reports or data prints to come out. And that could be due to either traders still that tryptophan effect, where, of course, through, because of Thanksgiving and because of Turkey, that tryptophan has settled into the markets, and investors aren't too enthusiastic about, providing more volume or buying and selling. But yeah, it seems as if the markets have been sort of slow for the past few sessions, and we may continue to see that until there's a reasonable catalyst. But just like we said before, this is the last trading week of November. We're about to transition into the final month of the year. We're going to see some month-end rebalancing play out in the market, and we're moving into that holiday season where things will start tapering off and slowing down within the first 2 weeks of December. Things sort of, after the first 2 weeks, market activity tends to come to a halt or drastically slow down. So then we tend to see that, even though we have the Santa Claus rally that starts the last 5 days of December, going into the first 2 to 3 days of January, we'll see that Santa Claus rally play out at the end of the month. But we have been seeing this sort of holiday euphoric buying come into the market. We've been seeing stocks trying to make higher highs, and we may continue to see that throughout the rest of December. We'll see. We would definitely see. But yeah, that's pretty much all I have for the fundamental analysis part. I don't really have much else to share. I just kind of wanted to cover that. But let's go back to our charts real quick. So yeah, we're back here at our charts, and yeah. All right. So yeah, so then what we're going to do is I'm not going to be in front of you guys too long. I'm probably going to cut it short
for today, but we can see the dollar did rally. This is the 5-minute chart. And I'll come back to that in a little bit. What I want to do right now is check on some of the pairs we were looking at. So let's do Aussie Swiss franc first. See how that's looking. Okay, that kept making its way lower, and it's right in this area of demand. So then whenever we see this, we may have to adjust a little bit. We have to adjust our zone, because we can't assume that price is going to make its way up here. So then now we know that we do have a zone right here we have to pay attention to. So if you want to, you could copy this same zone or clone it. And oops, let me go back. I don't know if we cloned it yet. I think I went to copy. Yeah. But yeah, we can just add it, to this particular area right here. Be on the lookout whenever price does reach this particular zone. But we're at this area of demand, so we have to be extra careful. We really do. But yeah, this is the Aussie Swiss franc. We still have a bias to the downside. Momentum, that's where momentum is. So yeah, we're just gonna keep an eye on this, and hopefully we'll get a good opportunity in. Let me go to the 15-minute. Yeah, okay, this is what we see on a 15-minute. It may just be a 15-minute correction into the zone. But yeah, I'll keep an eye on it. So then we have that. We have Aussie Swiss franc. What about Aussie yen? What happened with that? Did we get a break below? Probably not, because if we did, we would have been notified. And we didn't see a break and close below this zone. Prices respecting this zone. So yeah, this was a smart decision to wait for price to break and close below the zone before we actually look for a sell on a retest. So we're still trapped in this range, this consolidation on Aussie yen. And how does the Aussie Kiwi look? Like, I know at one point it was respecting that zone. It could have broke through it. Okay, so yeah, price corrected, went back down, and now it looks like it may want to slide lower. If you go to the 15-minute chart, we can see that price pretty much respected this minor supply zone, this structure right here. It respected this structure, which is the supply zone. And now we're seeing price. Looks like price may want to, looks like price may want to head lower, but who knows? We're just still going to wait. We're not going to assume anything or panic. We still want to wait for price to head up here to the zone. So then that's what we're going to do. We're not going to panic at all. But yeah, that's the Aussie Kiwi. Now, one thing I wanted to go over before we end is the dollar. And let me go to the weekly chart. And let me just do the Dixie for now. We can do, the equally weighted index or the Dixie. I know most of you guys have access to the Dixie because they give it to you on TradingView. But this is what we see on the Dixie. We see that price gave us this correction, which is really leg A, leg B, leg C. And we can see this correction a bit better on the monthly chart. We see this pull back into this area. Now we have this breakdown, and now we have this strong move to the downside. So then what this could sort of give us a clue about is the fact that since we didn't have enough momentum to push price up to at least retest these highs, we could see another push lower on the Dixie, maybe down to this next area of demand right here on the monthly chart. So then we definitely need to be bearish the US dollar. Overall, we need to be bearish the US dollar. But anyways, we can potentially see price fall lower. Now, let's go down to the weekly chart. And we can see here that price is making its way down. But is this a correction? because, we do have this zone right here. This zone of structure right here, or demand. You can look to the left. We can see that this was an area of demand. Will price react to this level? And, because that is probably what we're seeing right now. We're seeing a reaction, and we could see a continuation up to at least test these highs before it continues down again. Who knows? But let's go down to the daily just to see what's happening. So then on the daily, we see that price was consolidating. And yeah, if you look at price right now, price is sort of testing an area of demand. Let me go to Hakanashi so we can draw in our demand a little bit better. But yeah, right around here with this red candle where we have this structure right here. Let me just drop a yellow line so that we can clearly see that. But like right around here is where we have this zone or area of demand. And we can see that historically price tests this level on multiple occasions. You can clearly see it. It's as easy as day to see, because we can see that right here, this zone was tested as resistance, support, resistance, support. You guys get the point. But on multiple occasions, that level was tested. We can just see it. It was just a proven area. So what we can conclude is that this zone right here is a zone of demand, and we should see buyers come in. And for some reason, I don't know why, we don't see what we drew in on the weekly show up. So let me just do that right quick. Yeah. Okay. Make this visible on the daily time frame as well. Just get rid of that. And then just do maybe 2. Okay. So yeah, going back down to the daily again, we definitely see this zone, but inside this zone, we see this common area of demand or structure. So then let me just do this right quick. Let me just draw this in right here, and let me change the color to this color right here. So then we see price hit this zone. Let's go back to the regular candles, and it's reacting to this level of structure or demand right here. We see stochastics is oversold. So we can see a potential correction in the US dollar, maybe for the next few days. We can see price come up and test this zone of supply right around here. It can go higher. So I'm expecting the dollar to rally for today. That's my bias. US dollar strength. Let's go to the 4-hour. We see that price is still bearish on the 4-hour. So if you want to, you can wait for well, this could be a 4-hour pullback too, in order to retest this area again. It could likely create a double bottom or something. That's what I'm referring to. But for the most part, we have a bias somewhat to the upside. So we want to look for opportunities to buy on well, let me not say that prematurely, but just know that we could see price over the next few days grind its way or move its way up into the zone. That's something for you to really pay attention to. And let me also turn this Hakanashi on, and yep, and okay, yep, and we have this zone right here, which could be an area where price is attracted to. But yeah, for the most part, yeah, we'll be looking for buys, but bearing in mind that we are approaching 4-hour supply, so then there's a possibility we could see sellers come in as well eventually. So then, yeah, right around here we have 4-hour supply. Let me just draw this in. We have 4-hour supply. So yeah, we could see sellers come in right around here as well. But yeah, that's pretty much it. On a 1 hour, we see the reversal, inverted head and shoulders, and price is heading up to this area. So yeah. Anyways, I guess what we can do for now, my bias is to the upside for the dollar for today. So look to buy the US dollar. Look to buy the US dollar. But with that said, I hope you guys have a wonderful rest of your day trading. We may open up the war room in a little bit. We'll let you know. But if we don't see you later, or if we don't talk to you later, remember to always count your blessings, not your pips. And we would definitely see you soon. Stay blessed, stay encouraged, and we'll see you in the Discord chat or maybe in the private war room. But all right, talk to you later. All right, goodbye.